Markets are trading with a constructive tone, though beneath the surface, the macro picture remains increasingly fragmented. U.S. equities continue to hover near record highs, supported by another strong NVIDIA earnings report and ongoing AI enthusiasm, while FX and rates markets remain driven by shifting central bank expectations, geopolitical risk, and diverging growth signals across Asia and Europe. In FX, the dollar is softer after U.S. yields eased overnight, reinforcing the view that the Fed remains closer to eventual easing than renewed tightening. Across G10, price action remains highly differentiated. The Australian dollar is the clear under after a weak labor market data showed unemployment rising to 4.5%, alongside an unexpected contraction in employment, prompting a sharp repricing lower in RBA tightening expectations. By contrast, the yen remains supported by increasingly hawkish BOJ rhetoric. BOJ board member Kaida said underlying inflation is already around target and warned Middle East developments could further lift price pressures, reinforcing expectations that policy normalization still has room to run. Japanese data overnight was mixed, with strong exports offset by softer PMI readings and ongoing concerns around energy imports and inflation dynamics. Elsewhere in Asia, intervention from the Reserve Bank of India boosted the rupee, while South Korea confirmed the launch of 24-hour dollar won trading beginning in July as part of its push towards MSCI developed market inclusion. In equities, the Nasdaq remains the global leadership story. NVIDIA once again beat expectations and announced an $80 billion buyback, reinforcing confidence around AI infrastructure spending, although the muted share reaction suggests positioning in the AI trade is becoming increasingly crowded. SpaceX also filed for its long-awaited NASDAQ IPO, adding further momentum to the broader U.S. tech narrative. Asian equities followed Wall Street higher overnight, though Chinese equities lagged despite additional PBOC liquidity support, underscoring ongoing concerns around domestic demand and growth momentum. In commodities, oil remains highly sensitive to geopolitical developments surrounding the Strait of Hormuz after Iran declared a controlled maritime zone requiring authorization for vessel transit. While crude initially softened alongside lower yields and improved risk appetite, the broader energy backdrop remains structurally tight and vulnerable to escalation and risk. Gold remains supported as a geopolitical hedge and on the back of softer real yields. Overall, markets continue to balance resilient U.S. growth and AI-driven optimism against rising geopolitical uncertainty, fragmented global growth dynamics, and increasingly complex central bank backdrops. That's all for now.